we get started, I want to thank you all for taking some time out of your busy day to attend today's session. So today's a first in a couple of ways. It's the first time for ImpactPHL and the CFA Society of Philadelphia to do a joint program together. It's also the largest audience that we have registered to date. We have about 250 people registered. So I want to thank Pete Connors of the CFA Society of Philadelphia, Corey Donovan, and Dermot Murphy of ImpactPHL for making this event possible. So for those of you who haven't joined us in past, the Sustainable Investing Thought Leadership Group of the CFA Society of Philadelphia provides a forum to advance the dialogue regarding the role of sustainable investing in today's capital markets and beyond. ImpactPHL is a nonprofit advocacy organization helping investors large and small to align their financial assets with their values to create lasting change in the greater Philadelphia region. Today, they make a great sustainable investing team. So since we do have this large audience, I'm going to ask everyone to type their questions into the chat box. We already have a number of questions that came in pre-registration. And then what I'll promise is that we'll get to as many of those questions as we can, and we'll stop promptly at 1 o'clock. So this month, we're going to discuss how the greatest environmental and social impact an investor can make is in direct investment, investing in small and medium companies that are well-managed and mission-driven. So our speakers today, we have Jackie Rantanen of Hamilton Lane, and also John Moore of Social Venture Circle. And they're going to discuss the due diligence necessary to select, implement, and monitor private equity and private placement investments. We'll also explore the spectrum of impact investing and why allocating dollars to private equity can be the most meaningful investment an investor can make. So I'll let Jackie and John introduce themselves, and then Jackie's got some slides for us. So why don't you get started? Jackie, why don't you kick us off?
Great. Thank you so much, Michael. And it's really a pleasure to be here with everyone today. So as Michael said, I'm Jackie Rantanen. I am a managing director at Hamilton Lane. I'm an investment committee member, a responsible investment committee member, and I'm co-head of our impact solution. I have the great luxury of this year celebrating 25 years at Hamilton Lane. And so I have been a part of the company for a long time, but importantly, been able to be part of what has transformed in the private markets over the last 25 years. I'm also a proud Philadelphia gal. I have a Drexel and Villanova alum. So I'm born and raised in the Philadelphia area and have continued to stay here and be, again, a proud Philadelphian.
Okay, and John?
You're muted, John.
Thank you very much. Let's start this again. My favorite phrase, you're on mute. Anyway, what I said the first time was thanks to ImpactPHL and to the CFA Society and especially to Mike Kozak for pulling this together. This is a topic that I love to talk about. So I'm happy to be able to discuss it and answer questions too. My background, I was originally a biomechanical engineer, and I did cardiovascular catheters for most of the 90s. I did some manufacturing with the world's largest automotive leather for about 5 years, and then moved to Philadelphia and got into early stage venture. Initially through Delaware Crossings and Robinhood Ventures. I was a managing partner at Robinhood for 6 years and built out my own portfolio of early stage ventures investments. I helped found the local chapter of Investor Circle, which was a group of angel investors that were looking to support social entrepreneurs in the local Philadelphia area and invest in them. And that brought me into Investor Circle, served on the board there for 5 years, and Investor Circle merged with Social Venture Network, and just recently also announced the merger with the American Sustainable Business Network. And that helped me shift into kind of exclusively focused on impact investing about 7 or 8 years ago. I discovered I had a premise that you could make money at the same time that you were creating positive social and environmental outcomes. And so far that has proved out to be true. My initial premise was that these companies have some advantages that other companies do not. They have the advantages of recruiting more dedicated and devoted employees that have mission aligned, that are aligned with the mission of the company. They certainly have marketing and PR opportunities that other companies don't. And I also thought that there was a possibility that they had access to capital in a way that other companies don't. And that is certainly proving out to be true. And there's more momentum around that particular piece. So now as an early stage venture investor, I've also got involved with other asset classes as well, other private equity assets, real estate investments. And I'm also currently looking at the rest of my portfolio, in the public markets and trying to seek out impact investing opportunities within the public markets. One of the main things that kind of struck me a few years ago when Volkswagen was exposed to their carbon emissions cheating problem. They lost $17 billion within a couple days in the market cap. And I actually looked at my own portfolio, which in my public market portfolio was through Vanguard index funds. And I looked to see what the impact of that was on me specifically. And it was significant. I lost a fair amount of money from that one stock that was held in that index fund. And that really was a moment that clicked for me that, not having good governance, not having good environmental policies on the public market side was significant. So it reinforced a lot of my earlier thinking about impact investing and helped me shift in this direction.
Okay, speaking of shift, why don't we go to Jackie? Jackie, why don't you tell us, you have a couple of slides you want to just share with us. So
I do.
walk us through that.
Yeah, I do. Just as almost a level setting, just some background information that should help us, set a framework for the discussion. I think there's some of this that will be no surprise, but I think, a picture certainly speaks 1,000 words. And I think the top picture shows us really the state of where we are today. Now, this is all kind of sustainable, responsible, and impact investing. This is the United States only. So that's important to point out because certainly investors around the world are paying attention, shifting their focus, and driving capital. You can see that it's been a steady trend of increase in capital with significant increase over the past couple of years. We're private market specialists, so we do focus there, and you can see the $25 billion note in the private markets in impact in 2019. And so you see there's a growing focus on driving capital towards sustainable and impact investing. I think the left-hand chart at the bottom might be the most interesting, and what that shows you is that all kinds of investors are driving capital towards impact. We think that's really important because that shows us where we are today, and I think bodes well for the future of capital and impact. If we turn to this next slide, we believe that the private markets are particularly well suited for impact investing. There's really, it's kind of core to our focus and has been, and that is, longer time horizons, a real kind of focus on control and or influence, and then a playbook for growth and value and building companies. That's really kind of the private market play. This is a schematic that shows you, like most things, there's a spectrum. This is meant to show kind of the company life cycle, if you will, and really identifying that there's an opportunity set that we believe the private markets play in this ecosystem. if we look at the next page, I think this is probably the more exciting of all of them. And that is that there are so many trends happening that are really causing both the demand side to increase and the supply side. And there's a real need. There's a need for capital. There's a need for solutions, and they span climate, environment, and social. And so this is what we think will continue to drive transformation, both kind of in our business, but also in the economy. And the right-hand side shows you how some of those trends translate into real investable opportunities. And that's what we're focused on. And then the last slide here really just shows us, again, like I said earlier, it's a spectrum. There is no one way to invest in impact. We're focused on kind of the middle, which is the intersection of outcomes for both impact and financial opportunities, because that's our fiduciary responsibility, but it is a spectrum. And so we think that's important. Investors can invest across the spectrum depending on who they are and what their objectives are. And so maybe that's a framework. Again, we could go into any of this in the questions, but wanted to set some kind of a backdrop.
Yeah, no, thank you, Jackie. That's really helpful. And if I could just stay with the idea of the growth, and in your opinion, what are the reasons for the recent growth in the private equity sustainable investing space?
So I would say, I touched on this, but worth repeating, it's really a combination of increases on both the supply and the demand, as we're all kind of adapting to a changing economy. The demand is really particularly important. Investors are looking for ways to invest with intention and alignment. And that has resulted in a growth of opportunities across this spectrum, like we're seeing here, from sustainable investing to investing with an ESG lens to impact investing. And so that demand is real, and we are seeing it certainly. I think on the supply side, it's coming from an increase in companies that are powered through innovative technologies and processes. And these are the companies that we believe will transform the way we work, the way we do business, and the way our economy is run. So we think that's what's really important. It is not just one side, and both are increasing. Certainly trends that we saw that were beginning before the pandemic, we think the pandemic accelerated. And so we're all living in a world where it's undeniable the impacts of climate change, but we've also seen incredible examples, unfortunately, of social inequity and injustice. And so I think all of this is fueling the awareness of investors and increasing that desire to align their investing.
Yeah, and Hamilton Lane is right in our backyard. You're in Conshohocken, is it?
Yes, our new headquarters. We were in Ballackinwood. We just moved to our new headquarters, a LEED and Fitwel certified building in Conshohocken. We're really excited about it.
But I see you're all over the world. Like
we
you have
are.
offices everywhere. But if I talk to people in Philadelphia and I'd say Hamilton Lane, and especially if I talk to them about sustainable investing, they get a blank stare, or I receive a blank stare from them. Can you tell me how big of a piece this is to Hamilton Lane, the sustainable investing piece?
Yeah, it's an important and growing piece. And so, but you're right, we are a global investor investing for a global client base. And so while we're proud to be here in Philadelphia, we are focused around the world. That said, our sustainable and impact investing piece is over $2.5 billion of capital today and growing. This is an area that we are committed to, and we are excited about it. And we do have capital invested in the greater Philadelphia area, in the tri-state kind of Pennsylvania, New Jersey, and New York, and we're actively investing. And so we'd love to continue to support both the local economy, but obviously the global economy.
Okay, great. And John, tell us a little bit about your experience on the angel investing front.
Investing as an angel investor is sometimes a roller coaster. Early stage startup companies frequently fail. sometimes go sideways for years, and sometimes they just take off. And so it's certainly fun to participate in that process. I think one of the things that really is the most rewarding for me is just being able to invest in companies that are directly solving issues that I care about and issues that are important to Philadelphia. So I'll give you one example. First Step Staffing is an example of a company that the reinvestment fund recruited into Philadelphia. Bear Foundation helped support with an initial grant that company exploring a location in Philadelphia, and the city was also really instrumental in recruiting them. And but this First Step Staffing is a company that acquired based in Atlanta. They acquired a staffing company here in Philadelphia, and they converted the clientele of the staffing company to primarily formerly homeless and formerly incarcerated people. So I think 70 to 80% of the people that they place in these temporary jobs have experienced some of that within the last year. And their core premise is that, there are a lot of social services needed to help people, but also sometimes you just need a job. You just need a paycheck as well. That is a key piece of what they're providing. So we got an opportunity to invest in a subordinated note through Investor Circle at the time, and that was really exciting for me because I live in Center City, and homeless population is here, and we see it on the streets every day, and it's really upsetting sometimes to see the conditions that people are in, and it's really rewarding to know that over the last 2 years we've deployed, I think it's been over $35 million in wages to people that had recently experienced homelessness. And even in some cases, I've had the opportunity, to talk to somebody that, asked for some food or for some money. And in addition to that, I made a connection to First Step Staffing. And I feel like that's an opportunity to help that person in a different way. So that's tremendously rewarding, not just financially, because there was a 9% interest rate paid on the note, but also, from a social and environmental standpoint. I think, we've leveraged the $6 million that was invested in that company. Again, like I said, they deployed over $35 million in wages. So you can see the tremendous leverage that you have on that kind of investment.
Yeah, no, thank you. And Jackie, if we could go back to you and so we have some people attending that this is new to them, this sustainable investing piece. And if they were to advise their clients or investors that are looking to invest money, do you have a rule of thumb for a high net worth investor, how much they should invest in private equity? And then we could roll into, number of holdings and so on.
Sure. Well, we have a mantra at Hamilton Lane, and that is that each client is unique. And so we don't really have a formulaic approach. We don't typically advise people on their overall portfolio construction. We really focus on the private markets construction. I mean, I think that said, the private markets is a growing opportunity set and a growing piece of a lot of people's portfolios. And so depending on an individual or an institution's risk profile, liquidity needs, that really drives the percentage. But you can see all kinds of examples of, anywhere from 5% to 30% or more of how people build portfolios. What we would say is what you referenced, which is the opportunity for diversification. I mean, we are really big advocates of diversification. You would see that in our portfolios. We think the risk of overconcentration is one that should not be ignored, not in an individual's portfolio or not in an institution's portfolio. And so, we believe diversification across time, sector, geography, and number of holdings is all really important if you're going to build and construct a successful portfolio. And again, you would see that in our portfolios. If you were to look at an individual portfolio that we would build of companies, we would probably say something north of 15 presents a diversified portfolio, but that's such a generalization. And it really just depends on, an individual's opportunity. What I would say, particularly you asked around individuals, today, more than ever, there are opportunities for individuals and institutions to participate in a commingled fund that allows them that diversification and exposure and taking off some of the risk of either concentration or decision making.
And how much would a institutional investor or high net worth investor need to have to allocate to private equity with Hamilton Lane?
Yeah, so it depends. I mean, for a commingled funds, individuals can invest, something less than $1 million and get a commingled, get a portfolio. For institutional investors building a bespoke portfolio, they might be investing hundreds of millions of dollars. And so it really depends on the construct and the approach. But I think the good news is today, again, more than there used to be several years ago, there's the opportunity to either kind of invest in a commingled fund or to create a bespoke portfolio. It just depends on who you are and how much capital you have. But I think the important takeaway is that the private markets are accessible for individual investors. And I think there's more around kind of the sustainable impact focus than there used to be in that way.
And since you brought up the risk side of it, is how.
Hey, Mike, can I just
Yeah, go ahead.
One thing real quick. I just also want to add that there's been a lot of changes from the SEC over the years, and there's also a lot of crowdfunding opportunities and smaller dollar opportunities to invest in impact funds or other possibilities. So, I mean, we're looking at one at Investor Circle in the next couple of weeks called Raise Green as an example. And this is just it's like a crowdfunding platform that allows people to invest in solar projects, clean energy projects. So I think, what Jackie was saying is absolutely true for high net worth and institutional investors, but also it does reach down, private equity opportunities reach down into even smaller dollar figures.
And so to just pivot on that is that number one, John, do you have a rule of thumb, of how many investments that you believe should be in a portfolio to have a diversified portfolio? And then also, this whole idea of risk mitigation, but also the dollar amount that you need to participate in the space. If you could comment on that.
Yeah, sure. Absolutely. I think having a diversified portfolio is really important to reducing that risk. In the early stage venture space, especially, there are certainly companies where you lose all your money. So you need to have a portfolio, unless you're just really lucky and you pick a few winners. That's hard to do. So in my experience with the angel investing, it's you really start to see that mitigation of risk when you get above 20, 25 companies, and that of course takes some time because most angel investors, do a handful of deals a year, and so you need to have a little bit of a commitment. If you're just exclusively focused on angel investing, venture investing, you have to kind of commit to some time to build that portfolio as well. As far as the dollar amounts, like I mentioned, there are ways to invest smaller dollar amounts. My experience, like investing less than $25,000 into an early stage venture is a little bit tough if you're doing it directly as an angel investor. If you're doing it part of an angel group, maybe it's possible to build that out. So, if you kind of do the math, you can figure maybe $500,000 as a lower end. But again, I think there are other opportunities for people to engage in this. And then I think one of the other things when we're talking about, diversification of risk, I think it's really important to think about the type of companies that you're investing in, especially the management team that you're investing in, and the type of companies that they build. The diversity component of that is extremely important. So, having people that have diverse perspectives and backgrounds, diversity of thought, and experience is, I think, is really fundamentally important to having a successful company.
Okay, thank you. And I just wanted to go back, Jackie, to a statement that you made. If I look at private equity and I go back to your spectrum of investment, and I'm just trying to figure out where private equity is on that, number one, but also where sustainable investing is, and why the statement that the most impactful way to invest, if you want to make a difference in the economy, you want to make it, or in the environment, you want to make a difference in our social community, why is private equity the best way to do so?
Yeah, I'm glad that you came back to that, because it's an important topic. Now, look, we're biased. I'm biased. We are focused on private investing. And so it's, I would say, maybe a nuance, but we believe it's particularly well suited. It's not the only way to make an impact. It's not the only way to invest with impact, but we believe that the ecosystem of the private markets, the number of private companies in the US and outside of the US is vast and growing. The number of public companies is shrinking. And so the opportunity set, the drivers of change and innovation are often these private companies. And when you think about the playbook, if you will, for investing in private companies, the expertise that exists around the general partner community to invest in companies and support their growth is one that really aligns itself with identifying companies that are both attractive financial opportunities, but also creating change and impact. And so for us, we just believe the private markets are well suited. We think the opportunity set there is growing. And again, of course, us with our lens and our expertise believe that that's not to be overlooked by investors, but it's not the only way to invest. Does that get to your question and answer?
Yeah. Well, oftentimes if somebody says private equity, the thought is that's way too risky.
We love that question, because the reality is, yes, there's risk in all investing, but I think it's a misconception. It's equal with the misconception. I saw one person in the chat talk about commingled funds means that it's a fund of funds and fees on fees. Commingled doesn't mean that it's a fund of funds. You could have a commingled fund that's a portfolio of direct investments. Similarly with private markets, and we certainly have the data that can show you that the risk with private markets is not so much the risk of loss, it's almost the risk of upside. If done well in private investing, again, the diversification and good selection, we would argue that private investing is not as risky as people think. That oftentimes we have a chart that we show typically in our annual market overview that shows you the 5 worst years in investing across private equity, private debt, venture, and public markets. You would see that even the worst of times you can make money in private investing. And that doesn't mean you don't lose money on an individual company, but again, if done well. So it's really about your approach. It's about having the right deal flow, the right selection process, and the right access.
Yeah, no, thank you. And John, do you think about this a little bit differently? Do you look at, we're talking about some companies, and when you look at this and you look at the spectrum of investment, where you have on the left-hand side what Jackie had shown, you have traditional investing. It's all about return. It's not about the environmental or social impact. On the right-hand side, it was all philanthropic. Where, when you're putting together sustainable portfolios, where do you fall? Do you fall closer to the philanthropic side, closer to the traditional, or where? What is your thinking on this?
Yeah, that's a good question, Mike. I think I probably started out more on the traditional side, looking at companies that provide market rate returns, but are just focused on either a market segment or a business model that creates social, positive social or environmental externalities, right? So, but the interesting thing to think about is that, when we talk about extractive companies, I'll just say that when we talk about companies, that are based on extracting either natural resources or human capital or financial capital from communities or whatever the business model might be, we fool ourselves to think that we are immune to those consequences. So, as an example, at one point looked at my portfolio and saw, I'm invested through index funds. I'm invested in, oil producing carbon-based economy, and I'm invested in gun manufacturers, and I'm invested in the criminal, criminal system, and all of those things. Like, you take climate change as an example, like that has already impacted us here in Philadelphia. We had a very significant flood, just a couple months ago, and as a result of that, that impacted. Personally, actually impacted my portfolio, impacted a company that I had invested in. And so, this idea that we're just going to maximize the financial return and we're not going to pay either through our taxes or through our philanthropic efforts or some other way, that we're not going to pay for those externalities, is false. And I think is really important to consider when you're thinking about that spectrum of investments. And the other thing I'll say on that topic is, as I've, gotten more involved in this space, it's been really fascinating to kind of shift into more of that blended finance. So, the first step staffing that I talked about was an example where, a philanthropic resource went in to recruit that company, and then financial resources went in to fund the acquisition. Thinking about that blended approach, where you can leverage philanthropic dollars on one side and capital on another side, and blend them together to create, the companies and the successful, the outcomes that you're looking for, is really fascinating. And so I've started to do that within my own portfolio as well, where in some cases we did something recently through Social Venture Circle with the Enterprise Center, where we had some people invest in a low interest note that was funding companies that were trying to scale up, and cleaning companies that were scaling up in the COVID space. And we also realized that there was grant money required to help not only these companies, but also help the Enterprise Center support those companies. And so, we did both at the same time. We made an investment and we made a grant. And I think that blended type of investment is really fascinating. I mean, a donation is nothing more really than an investment seeking impact with 100% negative financial return. So if you think about it from that perspective, you can think about how to blend that together in more creative ways.
Okay, thank you. So Jackie, if just in private equity, the question that comes up continually, or that I hear, is that this is all great, but how do you identify deals, and more importantly, how do you do the due diligence around these companies. So if you could comment on that, that would be helpful.
Sure. And I will say, at Hamilton Lane, that's our sole focus and has been for 30 years in terms of identifying private companies. For diligence on impact, we take a two-pronged approach. And so we really do our financial underwriting and assessment distinctly from our impact underwriting and assessment. We think that's really important to be able to vet and assess a company on each of those attributes, because we don't want to, fall in love with the impact and sacrifice the financial or vice versa. And so for us, that's really important. So we have a robust iterative process on both, where we are looking at kind of all of the traditional financial underwritings to ensure a good, strong company, downside case, base case, understanding all of the financial metrics. On the impact side, we're really looking to understand and identify the opportunity and the challenge, the alignment of the management team and the intentionality. And really, really important for us is the metrics, identifying and agreeing to the metrics that will measure the impact. And those we track and report back to our investors on an annual basis. So we think, kind of keeping that integrity, ensuring kind of the importance of each, and making sure that we have a company that we have a portfolio that has companies that have been improved on both sides.
So if you have a high net worth, let's just say a family office, or you have an institutional investor, they have an interest in this area, do they have and they have an investment consultant, they're working with people, but do they need someone in particular that specializes in the private equity area to do due diligence on these companies, or how do you see this being done?
Well, I mean, it certainly takes work and focus and analysis. And so what we have seen, if I'm understanding your question correctly, I mean, a lot of times we are finding that people are looking for partners with the expertise to help them, analyze the market and find the opportunities. So while there is a growing kind of focus for expertise for investors to be able to invest in the private markets, I think many are looking for partners to really provide, again, that access and expertise, because you are talking about both understanding the financial side, and as John said, really understanding the impact side and making sure that you're taking into account not only what the company is doing, but also kind of what the externalities are. So again, making sure that I'm answering your question, we are finding, particularly on the high net worth side, the family office side, a growing interest here and a growing expertise, but there's some work to be done there in terms of people really having the ability to underwrite that impact side.
Thank you. And John, on the due diligence side, if you could talk a little bit about that. And also, I've heard that there's 10 investable impact investment funds that focus on affordable housing, healthy food, recidivism, life sciences, minority-owned businesses, and so on. And can you give, us just on a high level, like a high level overview of those funds?
Yeah, Mike, that's really exciting because, as you know, ImpactPHL's mission is to make Philadelphia a leader in this impact space, right? Because we know that there's a tremendous amount of capital seeking impact, and if Philadelphia can accelerate the investment of that capital in our region, that not only are we going to have the economic development of that capital, but all of that capital seeking social and environmental outcomes, much of those outcomes could benefit us locally. And frequently those social outcomes are a multiple of the actual capital invested. And there's some unique things about Philadelphia, our eds and meds strength, as an example, that really make us strong in this category. The Quaker roots that we have, we were the first socially responsible investors in the country with the Quakers. So anyway, so that's really exciting that we're starting to see this come to fruition over the past, I'd say probably 9 months to a year. All of these impact funds, locally based impact funds that, like you said, that are seeking, health equity or funding Black and Brown owned businesses, or addressing the industrial prison complex. All of these funds are now launching, and we have somewhere around $350 million. The Citizen did a great article that was highlighting that, and looks like there's going to be somewhere around $350 million raised to deploy into these funds. And at our conference, actually, we're hoping to highlight a lot of that activity, and and grow that activity through the Total Impact Conference coming up in May 16th and 17th. With respect to due diligence, Mike, it's it depends on the person and the investor, quite honestly. There's a lot of great resources here in Philadelphia. I mean, Investor Circle, a social venture circle that I'm a member of now, is a great resource for angel investors that are looking at impact. Other Ben Franklin Technology Partners is a really unique gem in this country, an early stage venture group here in Southeast Pennsylvania in particular. They deploy a lot of capital and support a lot of companies, and many of those are impact companies. We have other angel investments, other angel groups, Robinhood Ventures and Broad Street and Delaware Crossing, to name a few. And those are great places for people to go to find like-minded angel investors. And then there's also a lot of managers that are now opening their doors more to these impact investing and pursuing that. So again, ImpactPHL is a great source for that. We have an investor briefing that goes out and every month that highlights some of these investment opportunities, and also some of the partners that can help with people deploying that capital.
Okay, thank you.
Sure.
Yeah, we have just a question from Mike Neely about the trends in impact direct investments in 2022 and beyond. And Jackie, maybe if you could talk a little bit about that. What things are you, meaning you personally or Hamilton Lane, what are you excited about?
Yeah, so I would say at Hamilton Lane, we're really focused on a little bit of what I touched on earlier, kind of the companies that are driving innovation and change. We're really looking to support the changing world on both the environment and the social side. So on the social side, John said eds and meds, and that's a really important part. There's so much opportunity around access to quality education and quality healthcare that we believe is really both exciting and important and accessible in terms of providing capital for improvement and growth there. On the climate and environment side, we believe there's just so much capital need and so many companies that are really driving change around the changing economy and the transition that we're seeing towards a cleaner economy. And then there's also so much around sustainable processes. So everything from our food system to recycling and waste management to supply chain. And so we really cast a broad net because we believe that's the best way to invest with conviction. And so we see a lot and invest in comparatively little. But I would say that those specific areas are really where we're focused. But the spectrum is much broader. I mean, the needs of capital across both the social and environmental impact is vast.
Thank you. John, there's quite a few questions that came across on how to find deals, how to source deals, where are they, and so on. And I thought maybe this would be an opportunity to talk about OptImpact and what's being done there with the platform. So maybe if you can just tell the audience a little bit about that.
Yeah, sure. So I mentioned the investor briefing, and I think I saw a link to that in the chat. I think that's an easy way through ImpactPHL to find opportunities. in a relatively straightforward format. And I also mentioned some of the angel groups and the ecosystem organizations locally that are focused on this. Opt Impact is really interesting, and I'm excited to see the launch of that. Halloran Philanthropies with some other partners is launching this in the U.S. First in Philadelphia, and this will be a more formal marketplace database of both the impact investment opportunities as well as impact seeking capital. And so it's really, Halloran's been a really strong leader in this space. And unfortunately, given a moment to acknowledge Harry Halloran, who just recently passed away, was quite a leader in this space and supporting not just ImpactPHL, but many of the other organizations that have kind of launched the impact investing movement. But Opt Impact is another tool that they are bringing to the market, and hopefully we'll be able to share that more broadly soon.
Yeah, thank you. Jackie, this is a kind of a two-part question, but the first is just on working with other people, working with other financial advisors. So we have a number of CFA members, and I've seen questions that come across is that we have clients, they may be interested in this area. How do we connect? How do we do this together? And if you could talk a little bit about that, is how do they identify people out of their own client base that might be candidates for private sustainable investing, private equity investment, and how do they, how do you all work together?
Yeah, I think hopefully what they're seeing is a growing group of their clients who are interested in investing sustainably. I think that is the biggest trend. Hamilton Lane has long been a institutionally focused kind of partner, if you will, although we are growing on the high net worth side. And so we have a team of people here at Hamilton Lane really working with financial advisors to help them with their clients to access the private markets. And so we would love to talk to people about how they can work with their clients and how best to think about providing access to the private markets, because we do think that the democratization, the accessibility in the private markets towards a wider investor base is an important one, and one that we hope to be a part of and hope to lead. So we do have teams that are focused on that and would be more than happy to help, because what we know is true in our history of working with institutional investors. We're seeing now on the individual side, which is a real focus on information sharing and education and providing the backdrop and the kind of knowledge base to then make individual investments and make informed investment decisions. And so we've done that for years and years on the institutional side, and we're really excited to be able to do that on the individual side.
Okay, thanks. And what I do is I just put in the chat box. I just put in, if you want to be part of the CFA Sustainable Investment Group, they drop a line to me. I put in your contact information, Jackie, just in regards to Hamilton Lane, contacting there, and also John, if the interest is on the Total Impact Conference and on May 16th, 17th, to contact you with that or Opt Impact. The other piece of my question, though, Jackie, is that this what has become more of a focus is compliance in all areas. But if you look at the principle for responsible investment, the PRI, the signatory, being a signatory, and the first question is Hamilton Lane a signatory?
Yes, we are, and we were part of the kind of original group to be signatories to the PRI. And I would say, we continue to expand our affiliations. We think that's important. In fact, earlier this week, we announced our partnership with ICI, the Initiative Climate International. And you're right to call out that compliance and reporting is a significant part of, well, investing generally, but certainly sustainable and impact investing. I think we're committed to that. We continue to be advocates for transparency in the private markets generally and in impact specifically. I do think in impact and sustainable, there is an information need and challenge. We have across our our strategy and existence, we continue to invest in technology to help with that. So we've done it on the private equity and private credit side. Today, we have been an early partner in a company called Novata, and Novata is a data collection onboarding platform around ESG for private companies. And so I think what you're going to find is that the acknowledgement of the need for data, easy data collection, and then the ability for companies and investors to be able to understand the company's impact or ESG impacts or the trends in their portfolio is a growing one. And so I think as an ecosystem, there's opportunity there, and there's need to make sure that that data is available and people can use it. So it's a little bit of a twist on your question. I think, yes, compliance and reporting is really important. And I think that people need to understand that that's part of investing here today and not one that's going to change. If you're committed to it, I think the tools will continue to expand and grow. And certainly at Hamilton Lane, we want to be leaders and advocates on both the transparency needed for investors, as well as the collection of data so that they can have that transparency.
Yeah, no, thanks for expanding on that. And I'd be remiss if we didn't have a session like this and didn't ask just the question about greenwashing, whether, you're seeing clients asking questions, you're looking at opportunities, and you're questioning the metrics on measurement on any of this. So I ask either maybe John, if you start off, and we'll wrap it up with Jackie.
Well, in my space, the greenwashing is a little bit different because we're in early with these companies, and we are trying to develop the discipline around reporting and KPIs on impact, to make sure that as the company grows, the impact piece of it is significant. I'll say one of the other things that's happening in the venture space is that more and more angel investors in particular and impact venture capitalists are thinking about the investment tools that they use. So investing in private equity and requiring a liquidity event to get your financial return sometimes creates an opportunity for a shift in the philosophy of the company, and in some cases you can possibly lose the social impact piece of that through that liquidity event. So I would say it's a little bit less around the greenwashing aspect and more about how do you fundamentally ensure that the impact is happening and it continues to happen as the company grows and takes on more capital and reaches new levels.
Okay, thank you. And Jackie, any thoughts?
Yeah, I would just echo what John says. I mean, the real way to avoid greenwashing is to understand what you're investing in and then to be able to track it. But I think you're right. I do think it's a risk. I think there's a lot of talk around investing that has people wanting to know more and wanting to see more. I think we're in an environment today that the regulatory environment is trying to address that. We certainly have, SFDR in Europe, and the SEC is spending more time focused on this as well. And so I think you're going to see frameworks for reporting that will kind of demand more information, that will allow investors to have that data and information to work with. But I do think that John is right. It's really about understanding what you're investing in and being able to identify that.
Yeah, no, I would agree in the transparency piece. Henry Schilling and I have done a lot of writing on this, and there's a void. There's the lack of standards and and classifications in the US right now. And it's tough to label anything when there hasn't been the metrics set up from the top. So I can see that we're approaching the hour, and I just wanted to thank our guests, one thing, but also mention that the CFA Society, the Sustainable Investment Group, has a webinar on February 23rd at 12 o'clock. And in recognition of the Black History Month, we'll hold the fireside chat with fellow CFA member Vernita Exum, and she's the global head of ETF global markets for Vanguard, and she's going to share her experiences. And who's going to interview her is a member of the CFA board. He's also a senior management consultant at PFM, so Floyd Simpson will be interviewing. We also have a program with the CFA Society, with the ImpactPHL, and that program is on February 8th, again, a celebration of Black History Month, and this is all about local entrepreneurs. It's all about money moving in Philadelphia, and this should be a really good session, and you'll be receiving a registration link for that. I think what Charnay had done, who's the head of programming for ImpactPHL, it just flashed up on the screen. Just John Moore's mention of the Total Impact Conference. So you'll be learning more about that too. But I thank everyone for attending, and the activity in the chat box was great. And thanks for making this a very special day for all of us, Jackie and John. You did a great job.